Coming up, the Bank of England holds interest rates despite inflation hitting target. We take a closer look at the Guzman and Gomez float, and the battle to become Australia's largest listed company heats up. The details next. Here's your daily 10-minute business and finance news wrap for this Friday, the 21st of June 2024. The Australian share market did rise today, up by 0.34% on the S&P ASX 200, 7,796. For a look at the day's market action and a look back at the week that was, I spoke earlier with Dianne, Colledge, a private client advisor at Mortgage. Dianne, so the market's pretty flat today, but for the week they're up. Why do you think that is?
I think we've had a pretty solid week heading into the end of financial year. I think today has been pretty flat because we've got competing sectors. So you've seen a bit of a dip in the miners in particular, but you've also seen quite a significant positive rise in the healthcare sector. So both of those two sectors are competing in a sense that's flattened out the market's performance as a whole.
I'd love to touch on some thematic things that happened during the week with you if we can. First of all, global interest rates. So the Reserve Bank left rates on hold this week. Overnight, the Bank of England also kept rates on hold, but also pointed to the fact that there's likely to be cuts down the track. What do you think this will all mean for markets around the world? And what is that path to lower rates like?
Interesting question. So what we're sort of seeing, and we have an in-house economist, Michael Knox, who talks about the fact that he does not see an interest rate cut per se in the US in particular, which obviously drives our interest rate decisions, until later in the year, even possibly the first quarter of next year. Having said that, it was very interesting to see that the weekless jobless numbers came out this week as well, and they were quite weak. So ultimately, it may bring forward a little bit of sort of impact of looking at those rates. But having said that as well, we've also got a US election. So it would be quite interesting or difficult for the Fed to actually cut rates before that has a conclusion, which is in November. And then if we look at that, if we look at that compared to our rates, he's sort of pushed back our rate expectations for a cut until possibly either the end of the first quarter of next year or even into the second quarter of next year.
One of the other key things that happened this week was when we saw the AI chip maker NVIDIA take over from Microsoft as the world's #1 listed company by market cap. Although I think some of that was reversed overnight. I'm still keen to know from you if you think this AI hype has got legs, or has it run up too fast, too hard? Is it something that you like?
Absolutely. I think it's only the start of the thematic. We as a house are very positive around accessing all levels of AI. So it's not just the chip makers. So AI formulates productivity in most businesses around the world. So irrespective of NVIDIA itself, and that being the chip maker behind the computing power, it's also how AI is going to increase the productivity and automation of all the different businesses throughout the world. And even if we look at NVIDIA as an example, it's recently had a 1-for-10 stock split. So it also becomes a little bit more attractive for those people that actually want to buy something at $130 versus $1,300, irrespective of the fact that the multiple of the stock itself is actually the same. Another interesting point is that tonight will be quite interesting in the States because it's a triple witching hour, which to the layperson means that there's a lot of different expirations of different stock options, and also an ETF over in the US that buys all the technology stocks is rebalancing as well. So they could have the capacity of buying $10 billion worth of NVIDIA shares and selling up to $11 billion worth of Apple shares just to rebalance within that ETF. So could be an interesting night for that sector of the market.
Since we're talking about companies leading certain indexes or becoming the world's largest, in Australia, there's also a battle for the number one company too. BHP is Australia's most valuable company, but the Commonwealth Bank is just on its tails, right? CBA trading at a record high at one stage today. What's your take on why it's been doing so well recently? And what's your take on the sector in general? Because I've heard from numerous analysts say that the banks are relatively expensive at the moment.
Again, that's an excellent question, because ultimately the banks in Australia are very expensive. As an example, CBA itself is trading at 22 times PE versus some of the international banks, which are trading a lot less than that, and are, massive banks around the world. So CBA is still considered our highest quality bank here in Australia. There's two ways to look at it. You could say that it is ultimately extremely expensive. However, what we've got is a lot of money coming into our market, and our market is so small that because it makes up such a large percentage of the index, you're going to see flows into CBA. Therefore, the price is actually going to react positively and keep growing. I mean, we could see CBA at $150 just purely on the momentum behind the fact that we've got all this money from superannuation and passive investment coming into the market. Interesting segue is that Phil King from Regal Partners has actually come out this week and said he is short CBA. So it'll be interesting to see who wins that competition, be it the market or Regal Partners.
Another big story of the week, Mexican fast food giant Guzman Y Gomez. It's still a share market listing on Thursday, I think up around 30% at one stage, down about 10% today. What do you make of it?
Well, holy guacamole was one of the catchphrases of the day. We were very fortunate at Morgans to be able to participate in that listing. And I think that it was an excellent result. I think it was very well structured to enable a very good result. And I think now it's up to them to actually start to prove whether or not they deserve the multiple that they're on, because it's quite expensive. It was expensive at their listing price, but now it's even higher than that. And I think that, they've got to be able to prove themselves. They've got to extrapolate out their earnings multiple to sort of reflect their growth strategy and make sure that that all comes through. And then the market will actually, value it appropriately.
Can we talk about consumers at the moment? Because retailers are seemingly struggling. The likes of Kathmandu today warning of slowing sales. Mosaic Brands expects to swing to a loss. To what extent do you think this is a sign of a more cautious consumer? And what does it mean for these types of retail stocks?
Great point, Ricardo. I mean, basically, we've also got City Chic in Tradie Halt at the moment, which is another apparel retailer that is looking to raise capital to support their balance sheet and their business going forward. And that's also a reflection of the fact that they're all suffering from slowing sales. I think that, the consumer is broken up to a number of different sectors. And a lot of people talk about the fact that, you have the consumer that has already paid off their mortgage, that's sitting in retirement, that's earning money from the bank accounts now because interest rates are as highest level that you'll see in such a long period of time. So they're the consumers that are actually got the money that'll spend. However, you've also got the second cohort, which is people that are struggling. And as we see, the higher cost of living is definitely biting, and people are making choices as to where they spend their money. And sometimes that obviously may not be in apparel, and that's being reflected in the profits from a lot of the listed apparel makers that we have in the market at the moment. They're struggling.
And finally, where do you see the opportunities for investors at the moment?
Interesting. What we've got now is a bit of tax loss selling in full swing in the market. So what that does is actually provide opportunities for those people that have the capacity to pick up these oversold stocks. We have our own little shopping list with respect to this time in the market. And at the small cap end, we like stocks such as AP Eagers, IDP Education, corporate travel. And at the larger end, you can even look at stocks such as Sonic and Woodside, which have come off from where they have been trading and therefore sometimes become a candidate for people to sell to create a loss in their portfolio where they've taken gains throughout the year.
That's Dianne Colledge from Morgans.
This SBS On the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.